Just make that green.
All right, good to go.
Awesome. Yep. So that's it. That's my TA. That's all I have to say. That's it.
Nice. Well, I'm going to put in an order for a new Lambo and retire. So peace.
Yep. All right. Cool. We good on the recording?
Yeah.
All right. Hey guys. So today is April 25th, 2019. I have to roll in about 30 minutes, so I'm gonna just go through my charts and kind of review the watch list that I sent out to you guys yesterday, and then I'm gonna pass it over to Rocky, and he's gonna go through everything else. But just wanted to kind of quickly go through that and show you guys kind of my plan and what I'm doing here. And then if you guys have any questions, we can do that, and then I'll pass it over. So why don't we go ahead and start on Bitcoin. So I'll just pull up the charts that I sent yesterday. So this is what I was looking at as of yesterday. If we start with the possibilities, I was just looking at the bear case and the bull case. And I like to really draw up what I think the price action could look like just as a guide. Again, it very rarely looks exactly as I kind of draw these lines, but that kind of helps me. I'm a really visual person, as I think a lot of traders that use charts are. And so looking at the possibilities for the bear case, what that would look like is like this 5600 area of resistance would hold, basically a fake out breakout from a couple of days ago that turns into a V-top and then ends up breaking all of these support areas, right? So that's what that red line or bear case would look like. And I'm going to pull up the live charts and talk a little bit deeper about that, but just wanted to review these first. And then the bull case is if bulls maintain control here and we respect this immediate kind of price trending channel to the upside, I expect us to make another push through this 5,600 zone up to kind of retest the 6K mark. All right. And so based on the possibilities that we have right now here, my current plan, what I'm doing as this develops is I've adjusted my stop zone, which I'll talk about this in a second. I don't use like a hard stop right here, but I'm adjusting my stop area, which was prior below the breakout zone. Now I'm pulling it behind the last support zone. And then I'm going to watch this bullish channel that we have right here, which could turn into be like a bull flag, right? Pull, flag, and then maybe a second pull to see if the upside trend stays intact. And if it doesn't, I'm not going to necessarily wait for price to break below this area. I'm going to watch and hopefully be able to actively manage that a little bit better. And when I say actively manage, and whenever I talk about taking a graceful exit, what that means is if I notice that support is breaking and it's not following the bullish scenario, then I basically cut it off at whatever the price is at that time in the live market. And the challenge with crypto is it's a 24/7 market, right? So whenever I've done this in the past, sometimes I'm awake for it, sometimes I'm sleeping, but that's why it's called a graceful exit. You're basically looking at that, and then whenever you realize like, okay, this is not following my bull case scenario, you don't overthink it. You don't wait for a stop area to get hit. You just cut it off, right? That's what a graceful exit is for me. And again, I don't always do graceful exits, and I don't always let price hit my stop. It depends on what the setup is. And so to give a little bit of context, let's just look at the bigger picture and just a few things that we need to keep in mind. And the reason why I'm kind of planning around this trade this way is, number one, we are technically still in a long-term bear market, right? Now, this could change, but on the much bigger price chart, we're still making lower highs and lower lows. Now, this could be the first sign of a shift, And I think really the first sign of a confirmed bull market again would be a break of 6K, right? Where we get a new higher high, right? We had the first breakout through here. So this is the first kind of early sign, but I'm still not convinced that the bear market is over. Okay. So that's the first thing. And with that in mind, we know that in bear markets, and especially coming off of like the major like wall of death, as we call them, on the backside of a bubble price action, is there are bag holders into prior major support zones that have turned into resistance, right? So what that means is, and we've been talking about this for months now, anytime you get into a prior resistance area, or excuse me, a prior support area turned resistance, just that buy and hope mentality that a lot of people have, it's kind of a self-fulfilling prophecy. And we've showed examples from, going back as far as 2013 on how this works. But one thing I just want to kind of add as a caveat to this, because this is a breakout trade in a bear market, and typically breakout trades in bear market conditions respond or play out differently than in bull markets, right? So what do I mean by that? Well, my expectations for a breakout trade in a bear market are significantly different and less than what I'd expect in a confirmed bull market. So to give you an example of that, if we go back to 2016 and you look at these breakouts, these multi-month breakouts, right? So we had a shift in momentum here. This was the first, breakout at this point above, call it 500. And then we had another multi-month resistance breakout through here, right? And what I want to do is just zoom in and talk about the difference in how breakouts behave in bull markets versus bear markets, okay? So the first thing that we'll look at is if we zoom in real tight here, one thing you'll notice is on the first breakout, which is right here, notice what happens, okay? You get the breakout, you get a couple of days of consolidation, and then you get another breakout. And then you get a couple of days of consolidation, and then a bigger breakout, a couple of days of consolidation, and then another large green candle, right? In total, that turned out to be about 65% or so from the entire run, right? And that in aggregate gave us 1, 2, 3, 4 legs to the upside, right? So call it a 65% gain with 4 pushes or 4 extensions to the upside, right? Does that make sense, guys? Are you guys clear on what that means, like the pushes, and do you see the consolidation and how that was a pretty large gain that basically gave confirmation and showed a lot of strength? Okay, awesome. So if we look at the next one, let's measure this one. So this breakout was about 45 to 50% move, right? And that also was very similar to where we had one push, a couple days of consolidation, a second push, a couple days of consolidation, a third push, which actually went parabolic, and then there was some China news around here. So there was like kind of a black swan event. It was also $1,000 was a big emotional price level, so we went over under, and there was a lot of volatility. But again, it was very similar where it was like a 45% gain over, what do we say, 1, 2, 3 pushes, all right? So you get a lot of follow through is basically the point there. And then you can continue to do this, looking at all the multi-month runs, and they got bigger and bigger as the bull trend developed, right? So here you can see there was another breakout above 1,300. And then we had 1, 2, 3 pushes before a parabolic move, right? Then the break of 3,000, right? So you can continue to do this. There's like over a dozen examples of breakouts during the bull market. And those were really, really fun to trade. And that's why everybody's a genius in a bull market, because those price patterns are so easy. Now, and that's why I'm making a clear distinction between what we have happening now, because we are, again, technically in a bear market. Number two, we're trading into a very, very big emotional price level. And I just want to show you how breakout trades respond differently in bear markets. So you can see so far what we've had is one push. Let me blow this up a little bit, actually. We've had one push to the upside, which was really like a 2-day breakout, right? We had the first green day, then we had the second green day, and then it was like, okay, here we go. We're going to get a secondary run, right? So we had a couple of days of consolidation, and then you can see right here on this green kind of bearish doji candle, we had another breakout, but instead of doing something like this, where it closed up at the high, right? Instead of being like a really nice confirmation bar, what happened was it actually closed below the breakout level, right? So the resistance level was here in like the 5,300 zone, right? And it immediately got sold into, but that's okay. Anyway, what happened was over the next few days had more consolidation. And then 2 days ago, we had another scenario where we had a potential breakout, but you can see this one was still just kind of weak. It wasn't like the pushes that we've seen in bull market breakouts, right? This one actually did kind of close up above the resistance level through here, which is really around 5,400. And so if we drill down to an hourly chart and just look at this price structure, you can see what's happening. To me, this is still bullish price action. It's just not working as well as it would in a bull market. And the reason why is, again, this massive, as low as 5,500 up to 6,200. There's just a lot of sellers in the market, and this isn't a surprise to us, right? We've been talking about this for months. How when we were anticipating this breakout, we said, like, thinking like chess players, okay, guys, if we get a breakout, got to be careful, because it's not likely to just break through and run for a 50, 60, 70% gain, right? Now, it's been nice so far. I think we're up, like 30-something% from the breakout zone? Yeah, call it like a 30% breakout. So far, that's nothing to snub your nose at. But do you guys see how on the daily chart, we're just not getting that follow-through quite as easily as we do in a bull market? Is that clear? Just give me a quick why in the chat if that makes sense, or if you want me to repeat anything, or if that's confusing, let me know also. Awesome. Okay. Yeah. I hope you guys see that, because it's, whenever, if all you're doing, let's say you're like, a mom and pop investor who like doesn't pay attention to charts, and you listen to like CNBC or, CoinDesk articles talking about the price, right? And I posted this in chat a couple days ago, showing how on my RSS aggregator, I have a Bitcoin section through Feedly where I like aggregate all like the top news sites and top keywords. And it was kind of interesting because every single headline was every single top headline, the most popular articles, every single one was talking about Bitcoin's price and how it was bullish. And whenever I see that start to happen, I start to get real kind of paranoid about the price action. I'm like, oh crap, here we go. CNBC is talking about it again. Every single article is talking about how price is bullish. That's usually when we get some kind of snapback. All right. So that's why I'm really thinking and looking at what a bear case scenario looks like here, because we could absolutely wake up one day and have like one of these big red nasty candles that quote unquote surprises the market, right? And our goal as traders is to not be surprised, right? So if you plan for the bear case and you have a way to either, manage or reduce or eliminate risk, that's how we think about it. The wrong way to think about it is to try to like flip a coin and guess what's going to happen and hope we're right. Right? Why not just position ourselves to where we can be okay no matter what happens, right? So that's Bitcoin. The next chart I'll talk about is XTZ. So just looking at this one, so the possibilities, bear case, right now you can see, actually I'll pull up the live chart where you can see more price action, but right now we're at a very emotional price level around kind of the all-time USD highs. And so the bear case is, okay, $1, this round emotional level doesn't hold and we get a fast snapback. The bull case is basically price respects this bullish trend and then gives us another wave pattern. And then my expectation is that, just like we talked about in last week's class where Rocky was showing, you know, how when bull markets develop, the ranges open up and you have like exponential growth. So like this was about a 300% move in USD price through here. So if we just do a 1-to-1 range example, you know, if we wake up and we have like one more extension that's equal to this whole prior range, that's what that would look like. So I would start to look at like the mid $2 range if we did break out of this level as kind of the next profit target, right? Because I would expect if we broke out to new all-time highs, that's when those ranges really start to open up. So again, I don't know if that's going to happen, but that's how I tend to look at things when you are looking at an early trend. And so there's actually, I think it's on this chart. Yeah, I wrote up really 3 possibilities as I was thinking through this today. So the first possibility, which is the bull case, is we respect this immediate bull trend, right? So this is actually some really nice price structure where you get run, retracement, run, retracement, run, retracement, and you turn prior resistance into support every time. That's what's been happening, is this thing's just been grinding up over the past month, which has been really nice, right? Now, if that continues, that's what I would expect. If we can get another 1, 2, 3, 4 breakout above most immediate resistance here at $1.50, that's where I'd expect to start to see that range really open up. So that's kind of the first option. The second is this develops into a larger, more longer term bullish price pattern. So, and I'm really proud of you guys that have been looking at this and running larger scenarios. It tells me that you're able to see a few steps ahead into the future. So if we look at this as one major run, then a longer term bull case is like, okay, we get a deeper retracement, maybe back to 80 cents, in between 80 cents to $1. And then that becomes the pullback of a larger fib extension, right? So like if we run from the anchor low to the pivot high and say like 2 or 3 weeks out into the future, we do a 50 or 61% pullback of this major range, then that gives us, you know, longer term extensions into the future that we could use, right? So that's kind of the second case is, well, we don't get an immediate break of 150 and then parabolic, but it wants to take time. Maybe some sellers step in because we've had now 1, 2, 3 waves to the upside, right? And probabilities say that after 3 waves to the upside, a larger pattern develops and you can get a deeper pullback, right? So that's kind of what that second scenario is. The third is really my bear case, which is, okay, let's say volume and buyers just really dry up. Let's say we forecast maybe here through mid-May or even into June, and let's say the volume kind of looks like it was back here in like January, February, right? So it's like super low and it's just lost favor. Let's say Bitcoin does end up pulling back hard and capital, there's like another wave of capital flight outside of crypto. Buyers dry up, falls back to accumulation levels, meaning back inside of 40 to 60 cents. And if that happens, you know, my plan of action really on all of this is patience. Like, I don't know where this is going to be in the medium term, meaning like anywhere from 1 to 6 months out, right? Like it's kind of a hard thing to predict for a couple of reasons. One, Bitcoin is at a really strong inflection point. Number two, Tezos, this is still super, super early, and it could do what Ripple did in the early days where, we had some early accumulation plays and they took like a year or more, maybe closer to 2 years to actually pay off. But when they did, they paid off huge, right? So that's really my plan, is just to be patient on that and let that continue. Third chart is Brave or BAT, which is connected to the Brave browser. Like I said in this chart, I didn't go heavy on this because I didn't really know what to expect from it, but it turns out, just a really nice price pattern. Things are getting a little bit frothy there, where you have like on the third breakout, it basically did like a 1-to-1 of that prior trend. So we could be seeing some topping action here. Again, this is one that I just started to buy a little bit of. And this is also going to be like a longer term hold for me because BAT is a real product, right? It's like, it's something that's really cool. And I see if they succeed, they could take some real market share away from Firefox and Chrome. And then the final chart that I posted yesterday was just looking at the total market cap of all the altcoins. And basically what I was saying here is I don't see a clear distinction of like a clear play where I'm either super excited about taking breakouts on a bunch of trades or things are looking super, super bearish. It's just kind of mid-range and choppy right here, which is why I'm only interested in trading or investing in really high quality projects, not just speculating on, new stuff that I know nothing about, and really only want to trade stuff that's trading several $1 million a day on average or more, just because, look, guys, we're not shitcoin microcap traders. That's not what this group is. We really want to focus on the bigger moves, the quality projects, and that way, we don't get stuck in any kind of position, which could happen. But if you only trade the liquid stuff, that's going to really put the odds in your favor. So,
sorry, are you telling me that I shouldn't have gone all in on Mooncoin?
No, man. Satoshi's vision, I heard, is, now that it's off the exchanges, that's where the real growth happens.
Oh yeah. I hear that market's fairly hot. Apparently Satoshi's been taking some psychedelics and coming out with the visions a dime a dozen now.
Yeah. Absolutely. Let's see.
One thing that was interesting about your total market cap or altcoin market cap chart is it looked like if it respects the current zone and if it bounces off of that line, then it looked like a retest of that lower resistance turn support. So I think that, like, depending on how this market behaves in the next few months will be very telling. If it can push up and break a new high, then it's starting to just trend with higher lows. Obviously, like that higher point up there will be a major point of resistance to go through. And I think that if we did do that, we'd probably see a nice little inverse head and shoulders like your.
Yeah, exactly. That's kind of what I was drawing here is like, if we can get back up to whatever that number is, 1 billion or whatever, and we do like that inverse head and shoulders type pattern, that would be really nice.
Yeah, and if we break that resistance, then,
that to me would be kind of the first sign of like, oh, it's alt season again, right? But it's really hard to figure out right there because, like, say tomorrow Bitcoin dumps off, then it would look probably something like that, right? Where it'd be like, oh, okay, that was just a lower high. So that's why I was like, it's kind of hard to tell right now. But if it does that, if it retests that, my ears are going to perk up and I'm going to start really honing in on some breakouts.
Yeah, for sure. And one thing I've noticed too is that some altcoins actually made new lows recently on the BTC charts, such as good old Faithful coin that likes to continuously punish investors, also known as Zcash.
Yeah.
Apparently that just broke a new
Oh,
low.
on the BTC chart.
Yeah, on the
Yeah.
BTC chart, that broke a new low. Um, there's a new market that recently hit Poloniex and Kraken that's of interest to me, and I've kind of been eyeing it for a while because I think it's fundamentally.
Rock, you want me to pass the screen sharing over?
Sure. All right. Can everyone see my screen?
Yeah, I saw a couple questions about like Bitcoin dominance. Yeah, I mean, when Bitcoin dominance grows, there's typically a like on the altcoin BTC charts, you get a sell off, but I don't really base any trades off of Bitcoin dominance. I mean, it's something interesting to look at, but there's kind of an ebb and flow to that.
Yeah, so there's this new market that hit Kraken and Bittrex, not Bittrex, Poloniex. It's called Cosmos, ticker Atom. I'm not buying this right now. I'm very interested in this project. I've been kind of like buying it for a while, but the price is like 50x above the ICO price. So this actually,
Oh, wow.
they don't show the market cap here. I'm going to continue without supporting you. Okay. So they don't show the market cap, but if you're just multiply this times the supply, it's over $1 billion market cap. It's an interesting project, fundamentally something that can communicate between multiple different blockchains and such. But although I'm interested in the project, I'm gonna wait for more price discovery. It just got listed. I like Kraken. It got listed. I'm not gonna buy into it until maybe like seeing what happens a few months out and seeing.
Yeah, if it's that high above the ICO price, it could pull like a poly or a poly. Right?
Yeah, I'd like to see this thing get hammered lower so that I can actually get a decent price. But if it does get to lower levels and I scoop some up, what I might do is I might reduce some of my Zcash position and put it into that, so that way I get the benefit of tax harvesting. Zcash is actually a position that I'm down on. Whereas like Holo and Tezos I'm up on. Nice. Zcash I'm down on. I still think it's a solid project and it'll have its moment of sunshine. Its next halving is timed around Bitcoin's halving, but it has a very high inflation rate in its early days, and there's that 20% founders reward. So all of that could be adding some additional selling pressure. I still think it's a solid project. Tezos will be integrating this technology into their blockchain. So that'll be kind of cool. What I like about that is it's a blockchain that can just upgrade any other cool feature from any other blockchain based on community consensus, community vote. And the reason why that model really, really interests me is that, right now in a lot of other projects, it's really up to just a handful of stuffy devs, whether or not they want to integrate changes or not into the protocol. And usually you got to get if it's proof of work, you got to get miners involved and you got to get users to update their nodes and stuff. But there's no direct way for coin holders to vote or voice their opinion on anything, right? So it's kind of, there is a degree of, there's checks and balances that make it decentralized, but it's not, it's not built into the system where every investor can just, vote on changes or whatnot. So that's the one thing that I'm really interested in. And I also think that proof of stake, we're starting to see it get a lot more traction. I mean, it's something that's been around for a while, at least since 2014. But we're starting to get more traction on it just because larger players want more of an active role in their investment, and they also want the ability to earn some staking rewards and such. Whereas, you know, in traditional companies, you'll get voting rights and such as a shareholder. Aside from that, let me go into Hive. Hive turned into a little bit of a debacle. So I was looking for some kind of stock, something I could buy in a tax-free savings account that was correlated to the crypto markets. And so for me, apparently there's a lot of, 80% of this is owned by retail investors. So that means that it's not super liquid either. So that means that it can be very emotional and volatile stock. But the problem with the correlation is, you know, it only stay correlated and just track the markets as long as there's no, you know, black swans or anything internally that's kind of disruptive. But we did have some news breakout. You know, one of their largest shareholders and I guess partners, you could say, Genesis Mining, who's been providing them with mining equipment as well as like selling them hashing power and such, basically tried to do a takeover of the directors because there's like they owe like $50 million apparently to Hive or whatnot. So obviously that's like a random black swan event, unanticipated, and that stuff happens. It happens in crypto. It happens in the regular investment world. I think like I can weather black swan events on decentralized networks a little bit more. I can be a little bit more patient just because, you know, networks are decentralized by nature, so they kind of build their own ecosystem or almost like a life of their own that has multiple moving parts and players, and investors can be active participants and actually have some level of influence or control over the outcome of that network. It's a little bit more granular as far as being an active investor. Whereas like something like a stock, I mean, if there's some corporate infighting happening, that's really out of my control. There's no, you know, it's not like it's decentralized or anything. Obviously, like if a company goes bankrupt, then basically the stock goes to zero and it's over, right? Whereas like if a network suffers from some attacks or whatever, it's not over. You know, it can bounce back. There's been multiple networks that have even been 51% attacked, like Ethereum Classic, for example. And, you know, there's a little blip on the charts or whatnot, but, you know, business as usual, it resumes. No big deal, right? So I feel that in a decentralized ecosystem, fundamentally, I think it's a little bit more robust than just, and more, a lot of the information tends to be a little bit more public. Whereas, you know, with a private company, or I guess it's a public company, there's just so many other variables involved, and there's no guarantees that if a company doesn't do well, there's no guarantees that it's going to stick around. So I don't necessarily think that this company is going to go bust or anything like that, but I think that this is the type of black swan event that'll likely open up to some legal disputes, and it could get a little bit choppy. So I had a couple of I still want to buy back into it. I'm not going to be buying as big as a position as I originally intended to reduce my risk. I set an order around 28 to 29 cents area just to see if we do get like a double bottom test of support. I'd set a throwback zone too as another potential buy zone right around here, but I didn't set any bids or orders there. I just wanted to watch and see how this develops. So again, like my whole purpose and intent for doing this or buying this is to be able to invest in something in the legacy markets, in a tax-free savings account that's correlated to crypto, so that any gains that I make in it will be tax free. But the correlation will only stick as long as there's no internal conflict or strife. So with more legal disputes and bad news events, it could be a while. We could see this chop around or whatnot. So I have some bids down here. And then I was looking, I was like, okay, instead of going into what I would consider like a full size position on this. So I was only basically I was like a third. So just to recap for anyone who's not aware. So I was about a third of a size in to my position at around, I think it was around 63 to 64 cents. So right around here-ish. Then it ramped up, it's correlated, everything's going well, it was creating like a nice little consolidation pattern. I was going for much bigger gains, at least like a triple or something like that. I wasn't really going for small gains, so this is more like a longer position trade. With that new Black Swan event, it gapped down. It had dropped down to here, and then it had come up and bounced, right? So when I sold, it was right around 61. So I was down probably 3.5%. But there's one thing that I have noticed sometimes in the stock market, just from previous buys that I've made, is that usually what I've noticed is if you get a Black Swan, you'll get multiple days of heavy selling instead of just one day. So so I just wanted to kind of cut it instead of holding it or whatnot. If it was if it was something like a Tezos or some decentralized network with a lot of growth and upside potential, then I'd likely average down or whatnot. But I don't have the same level of confidence in this play. So what I'm going to do is I want to see if I can get a lower fill. And I'm only going to do the 1/3 position as my total position. And then the rest, I'm going to diversify and look for some other crypto-related investments. And so one thing that I realized was that Novogratz has his company. He has a company listed on the Toronto Stock Exchange called Galaxy Holdings. So this could be another one that has some correlation to the crypto markets, but I'm not eager to jump into this just yet. You can see, it's been a little bit choppy there. I think it used to be an old company, something pharmaceutical or whatever. So this is looks like it's still in price discovery, lower into the spectrum, but I'd like to scale. Then I would have really liked to scale into Bitcoin Investment Trust, but unfortunately, because it's on the OTC markets, you can't purchase it in Canada through registered accounts like TFSA or whatnot. So I wouldn't be able to get those tax benefits. So it would kind of defeat the purpose. Although, just with the investment trust, one thing to keep in mind, and perhaps for anyone who's in the States, Bitcoin Invest. What was interesting is because this is a novelty product, and at the time there wasn't a lot of products that financial institutions could buy, it actually had a significant premium over the regular crypto markets by about double. Basically, it was almost double the price of regular Bitcoin at its peak.
Even now it's trading at a premium because I think it's 1/10 of a Bitcoin or 10%. So I think it's trading at like $7,000.
Yeah. And there was obviously there's a nice little possible buy zone here, but I didn't really have any reason to try to buy this because there's no tax benefit for me. Now, an alternative would be buying some for a longer term retirement account or whatnot. If you're in the States, we can see just broke this line, a couple green candles and popped up. So that could be one reason to invest, is when the premium gets so ridiculous that it's up, close to double what the regular price of Bitcoin is. But
or you could just buy Bitcoin in a self-directed IRA with custody. There's a lot of companies doing that now.
Yeah, that would probably be a good way to.
I'd rather do that than buy like an OTC stock, and Rocky, to your point about like buying the stuff on the TSX, like I'm really weary about companies that trade either OTC, which are basically penny stocks, right? Like OTC or Pink Sheets or the TSX. Like there's a lot of fraud in those markets, and they're generally like really thin. So you just got to be careful, because like we saw with Hive, right? Yeah. Yeah. I mean, like when there's news that hits, you can get those gaps and they're really illiquid. So you can get like 20, 30, 40% moves in a day. So yeah, you just got to be real careful if you're going to try to invest in those areas.
Yeah. Like ideally what I'd like to see is obviously some ETFs or some more investment funds that make it a lot easier for people to be able to purchase in those types of accounts.
Yep.
But there's not a lot of really good options for me at the moment to buy something in a tax-free savings account.
Yeah.
So I'm trying to play around with different options, but I'm kind of treading in uncharted territory here, so that even for me, this is a bit experimental, right? I feel a lot better just investing and dealing with like direct crypto.
Yeah.
And obviously, like I prefer networks, actual blockchains versus dApps, because to me, like dApps are even worse than a lot of these are even worse than like some of these, sketchier companies, because at least with a company, let's say in the Toronto Stock Exchange, like they need to have like, quarterly earnings reports, and they have to have some level of like transparency. Whereas like in crypto, if someone does an ICO for some company in BVI or whatever, there's really like no obligations to the investors whatsoever. Like they don't have to give quarterly, they don't have to show anything where they've spent the money. And most of them don't. Most of these ICOs don't. And you see the burn rate of some of these ICOs. I mean, some of them have already plowed through like $50 million in a year, just like 1 year. And with such a high burn rate and producing like little to nothing, I mean, obviously there's money being squandered there, right? Because, better products have been created, functional products have been created with much less money from developers just bootstrapping.
A lot of the gold rush is just blatant scams, or just people that never learn how to run a company thinking they can just get rich by raising capital, where really raising capital is a responsibility and really a debt to your investors, right? But the people that looked at it as like, hey, we raised $50 million, now we're rich. Yeah, those are the ones that are going to fail.
Yeah, exactly. Because they just probably the line between personal and corporate or whatever has probably got blurred as far as their expenses and such. Yep. And we don't know, because there's no budgets or quarterly reports or anything that are issued out. So.
Yep. Well, hey, Rock, I got to run. I'm running late for a meeting, but hey, guys, if you have any questions on any of those charts that I posted, feel free to shoot me a message. But otherwise, I'll see you guys in chat.
All right. Take care, Chris.
Thanks, man. See ya.
Cheers. All right. So Zcash, if you look at the USD, it kind of looks like it's in this accumulation pattern, but on this BTC chart, it broke a new low, so it's still on the BTC chart showing a slow grind of death. But the thing is that as much as that can be annoying when it does that. If you zoom out on the bigger picture, and even though the percentage drops can be large from here to here, and it doesn't look like that compared to like some of the other candles, you know, in my opinion, you know, this will likely reverse at some point, right? And so what I would look for would be a break of this area. Now, it's not really much for me to do. The only thing that I might shift, I'm still going to hold my Zcash. If I decide to buy something else, then I'll basically shift some of those funds into whatever else. But I can't justify as much as Cosmos looks like an interesting project, and you know they've got staking capabilities and such as well. As much as I like that, I really can't justify spending 50x the ICO price. So you know, with a little bit more price discovery, it might pull off something similar where it just kind of breaks down, similar to many other coins that get listed and have a big sell-off. You know, including like stuff like Zcash or Tezos or anything, or just like a huge sell-off at first and then hits a reversal. So Cosmos is on my watch list. So, you know, it's something that I'd like to be invested in, but it's not something I'm going to be investing in right now. I'm just gonna be patient. And it might be that I never get an entry that I feel comfortable with. So I might never invest in it. Because right now my focus is mostly on, I mean, you could trade anything with shorter term time frames and such, but you know, my focus has shifted towards position trading and investing, right? So that's pretty much, you know, anywhere from like 6 months to, you know, or several months to a few years, right? Depending on what price action does and if I can hit higher targets, right? And I've kind of explained my my rationale. Most of it is tax related strategy. You know, it's all fun and games when you're just building up capital or whatever, but then when you pay massive tax bills, suddenly you have to factor in that into your strategy. Otherwise, that can be a massive expense. And of course, it's all dependent on jurisdiction. I found out recently that apparently if you're in Germany and you're paying taxes in Germany, if you hold something for a year, you don't pay capital gains on it at all. So it's definitely, wherever your jurisdiction is definitely worth figuring out what the tax laws are in relation to crypto, how they're treated. And it's worth kind of setting that up in advance, thinking about that in advance, right? In my opinion, I'd almost say it's equivalent to, let's say you start a company. They say that if you start a business or a company, you should have the exit strategy in mind ahead of time, right? To prepare ahead of time. So, you know, if you're starting a company and you form it in such a way where you're going to get the max tax benefits when you sell the company and so on and so forth. It's good to plan that out years in advance. So I think the same thing is applicable to, you know, one's trading and stuff. All right, so as far as some drama is concerned, I just want to look at BSV. That had a nice dump. It got delisted from a bunch of stuff. And be very, very careful with stuff that gets delisted. As you can see, I'm sure some people, you know, must have been very tempting to knife catch, right? But you look at these bounces. So in my opinion, this is in a bit of a slow grind death spiral. You know, so you could like try to knife catch this. And I'm all for knife catching. I love trying to catch bounce plays on bloody candles and stuff. And sometimes I like being the edgy contrarian and even buying stuff that I hate. But this is definitely one market I'm not touching with the 10-foot pole. That's just that's just my own personal opinion here, but you can see already from this, just from the breakdown right here, it's already dropped like, good 46% on the USD chart, maybe even a bit more from the peak to here, 50%. Now there's still a lot of volume on this. So we'll see if you can kind of see it. It was in the top 10, but I've been watching the volume dropping, right, from the split. So obviously it's not doing as well as its other counterpart here, right? So, but I've seen lots of things when they get delisted, they can just go into a death spiral. I keep referring to this market, TRST, but this is like the type of market where you could, or it reminds me of like an HMNY. It's not to say it won't recover. It's not to say it can't bounce. One whale can pump the price, but it's definitely not something that I want to be in. So it's kind of point that out because it's a huge point of news and drama over the past few weeks. I'm going to jump into some news. All right. So apparently Disney is interested, might be making a move into the crypto space, right? So they're trying to acquire an online gaming giant, which also owns Bitstamp and Corebit, right? So if they ended up buying that, then they would be owners of those exchanges. So again, this is just more evidence. I point this out because it's more evidence of crypto going mainstream. When you have these large mainstream multinational corporations trying to get involved in the crypto space, trying to invest in crypto and buy crypto companies. Obviously, they see some growth potential there in the industry. So a $13 billion deal, that's not pocket change. So obviously they have to see some growth in the industry for big companies like that to drop some of that money, that kind of money. But that kind of growth is kind of like, they have a control over growth of the industry. Here's the thing, right? It's not that I'm big into these huge Fortune 500 companies or anything like that. But when they get involved in the crypto space or any space or industry or emerging tech, they have huge marketing budgets, right? With those marketing budgets comes, primetime commercials and all that kind of stuff, or commercials in their movies or whatever, right? Shilling whatever crypto project or whatever they're invested in, type of thing, right? And so that attracts more investors, that attracts more users, that just, a lot of people in society just tend to follow societal norms, right? So like as early adopters, being in something that's kind of fringe and experimental before it goes mainstream, that's where all the real money is, right? That's where like the majority of people who have made vast amounts of fortunes usually did it by starting a company or investing in something before a huge societal paradigm shift. And a lot of it has to do with technology, right? We've seen it with the internet and such. So yeah, anyways, we'll probably see a lot more of that. So again, just a little bit more evidence of crypto going mainstream. Oh, my point was a lot of those retail investors, they don't get in on things until it becomes socially acceptable and cool, before like their neighbors are doing it, everyone's doing it. Well, by that point, the market gets pretty saturated. And then if too many people get into it, then it's crowded and usually leads to reversal. We saw that at 20K. So, but there's still a lot of growth potential, right? So I still see this as, I wouldn't say it's early in crypto, but you know, it's definitely not at the point of market saturation. Other interesting news. Bangkok-based securities broker plans to offer tokenized real estate on Tezos. So we already know that Elevated Returns was doing this, and apparently they just required their licenses or whatnot to be able to move forward with this, right? So that's kind of big news. Here's a really interesting report I highly recommend. Everyone, if you're not following this person, Tour, then I recommend following this person on Twitter, or at the very least downloading this report. The report's, it's a great report, good fundamental analysis, and basically just showing how Bitcoin is in heavy accumulation. His previous reports, similar reports in 2015, were fairly spot on. So I highly recommend reading this. A warning. Apparently there's a bug, not a bug, a virus that pretending to be a Ledger wallet. So just make sure that if you're doing anything with Ledger, anything that asks you to input your 24-word recovery phrase on a website is probably a scam, because when they do a recovery, they have you do it on the actual device, right? Instead of like plugging it into a website. So if you ever think you're logged into something like this, and then they're asking you for those words on the website to type them in, then it could end up being malware. So you need to be careful with that. All right. So that's pretty much it for the news. We'll wrap this up with some Q&A on some tickers. We haven't done some ticker Q&A in a while. So I'll look at 5 markets. What's the ticker for that? Yeah, just put the ticker symbols in. All right. All right, VeChain. Okay, so on the BTC price, so you can see here, so this is something that's interesting between the difference between something like this and Zcash, for example, is that Zcash didn't push up quite high enough for it to not break support, whereas some of these other projects, their push up on the bounce was high enough that the sell-off on the BTC chart just brought it down to a retest of support levels instead of breaking support, right? So if this bounces on this area, then I would consider this a throwback on the BTC charts, and obviously like a higher low, right? If it bounces off this zone. In my opinion, this here would have been like a clear accumulation zone. It broke out of that accumulation zone, and now it's retesting a general resistance area, right? If it can bounce off of this resistance area, then we're good to go. Obviously, if it does a full retrace down into the lower resistance, then it's creating like a larger accumulation range. And then if it breaks down, well, then I guess it was a flop, right? And here's the thing, right? It's like something can look like it's an accumulation and show all the accumulation patterns and then still end up breaking a new low. So there's never any guarantees, but in my opinion, I would much rather, just my own personal taste and strategy is I would much rather buy stuff down here and weather the storm than chase a market that's, that's pumped up table scraps, chase something that's up higher or is parabolic or whatnot. So even though the markets are slow, even though the markets can be a little bit choppy, even though there can be drawdowns, I'm a lot more excited about crypto when it's at the lower end of the spectrum than at the higher end of the spectrum. And why am I more excited about it? Because the risk to reward for me is a lot better as an investor, and I can be more crypto oriented instead of fiat oriented, and it's a lot less work, right? Like if you invest in things on the lower end of the market cycle and accumulation in the market cycle, you can literally just sit back and just kind of ride the trend for like a few years once you hit a reversal, without a ton of micromanagement involved if you're not trading the smaller swings, right? So the worst case bear case scenario for this would be if it just punched through and it broke support. Zcash broke support, but if we start seeing that on all of the crypto markets, all of the altcoin markets, then obviously they still got a ways, and it could start another slow grind session until it flatlines into new level of support. But so far other markets haven't necessarily broken support. And then if I were to look at this on the USD charts, and like people are still debating this whole like USD charting on USD versus Bitcoin charts, and it's still this raging debate as if there's a right answer to that. And in my opinion, the right answer is you need to chart on both, right? The right answer is your investment needs to gain in both dollars and on the Bitcoin charts, right? But that's a little too multi-dimensional for a lot of people's brains to handle. But that's just the way the crypto markets work right now, right? That said, so I want to see it gaining on both BTC and USD. That said, with the prices on the lower end of the spectrum, the BTC pairings are a lot more interesting to me. I'll still always look at the USD, of course, because that's what pays the bills. That's what you get taxed on. But the lower end of the spectrum, one could trade on the BTC charts and accumulate more BTC before the start of the next bull season, right? Whereas obviously, like when the prices are really high and parabolic, if you're charting on the BTC charts and you're trading on the BTC charts, then chances are you're creating a bunch of taxable events that'll put you into debt, and your portfolio might get wrecked, like we've seen happen. A lot of stories of that. Anyways, I digress. So now is definitely at the lower end of the spectrum. Now is definitely a much better time to be charting on the BTC charts, but you got to do both. I think this debate back and forth and which one's better is kind of, in my opinion, it's kind of childish. New money coming in, there's a lot more fiat pairings than there used to be. Everything's still correlated to Bitcoin though. A lot of new money coming in is probably going to be on-ramping into fiat on-ramps. All right, CLO. Not a ton of price discovery on this. Let's see if there's anything with a little bit more price discovery. Okay, hit BTC. Okay, so we can see something like CLO. So it's kind of a mixed bag right now. We can see something with CLO right now. So I believe this was an airdrop from Ethereum Classic. I made money off of the ETC rally leading up to the airdrop. I did not hold it for the airdrop. I sold on the news, and so I didn't get any CLO, and I don't really care, right? That said, just looking at this chart alone, it looks like it's kind of in a bit of a slow grind phase, right? This isn't necessarily something that I would touch right now, right? It looks like it's kind of just on the BTC chart, it's kind of just bleeding out. You could see that it did break support. It hasn't really flatlined at all, right? There hasn't been any like sideways flat accumulation range or anything like that. It broke support, not too long ago, last week or whatever. So I wouldn't touch this. If I'm not touching this. That's just my own personal opinion. Obviously, I can be wrong. Everyone's got to make their own conclusions. Take that with a grain of salt. But I either want to, like, I would either knife catch, because you can see, like, if you break down and you look at these candles, like, none of these are like knife catching capitulation candles. This is like slow grind, right? This is tiny selling, incremental selling, just bleeding, right? Whereas, a nice, I don't know, something good for knife catching would be, I don't know. Let's just see if I can find an example here. What a good knife catching candles would be like, so I was averaging down on this, for example. This was like, I think this was the Clo airdrop or whatnot. And so you can see this isn't like a slow bleed, right? This isn't just like tiny little candles. Like here, you kind of get into a slower grinds, right? But here, like, I mean, look at this candle, right? One massive candle, like knife catching a huge candle like this at support. Very high probability of hitting counterforce with a bounce play. Very high probability. I think I started averaging down on this one as a quick trade. I think I started like right around above 20, and I went all the way down, and then I scaled out on the V bottom. You can see these candles are a lot bigger. So some heavy selling here, right? Nice sharp. And then I knew there was a fundamental event, an airdrop coming up. So I knew that, those two things combined with the heavy, sharp selling capitulation with an airdrop, that would lead to some nice little FOMO. And it gained a lot higher than Bitcoin at the time, right? But then you kind of look, so how many candles is this? This is 1, 2, I'm going to count both green and red. 1, 2, 3, 4, 5, 6, 7, 8, 9, right? So that's about a little over a week. Whereas like when you get into this selling, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, right? Just like 22 days of just like slowly bleeding out. And then it has a bounce play. But then you can see it gets even worse, right? It can get even worse. Like you have these kind of the worst slow grind. And so even this was still a lot sharper. It had a decent enough bounce play. But when you get into real slow grind phase, when you move from like the fall season, like peak volatility, into just like a slow bleed, in my opinion, the reason why the markets just kind of like slowly bleed like that is, it's just like bag holders, or if it's like ICO whale investors or ICO insiders who, printed up a bunch of free, ETC wasn't an ICO, but other markets, other tokens, you've got these people just print up free money. They sell these tokens, and so they end up owning, it could be anywhere from like 10 to 80% of the supply. And so a lot of that selling can also be them just like slowly dumping their bags in the market, but it's just like a real slow grind. You usually want to stay away from those slow grinds when knife catching. And then once you get into a little bit more established support and you have a bit of a sideways range, then usually that's indicative of some level of accumulation. So you can kind of see on the ETC chart, a lot of the USD charts, a lot of fiat charts are showing a throwback, right, to the prior resistance zone. So it'll be quite telling if these things bounce. Or if I were to look at this on the BTC charts, actually did it break a new low? Let's look at Poloniex so I can see the entire historical. It's like right at support. There's a possibility of double bottom support. So we're kind of, for some of these markets, we're kind of at a bit of a do or die moment, right? What could end up happening? But look at this overall price structure, right? So you can have like a lower accumulation range, but you could also say that this entire price structure might be a larger accumulation range, right? If it bounces off of this support. And if it did, what chart does this remind you of? This reminds me of the Bitcoin chart in 2015, right? So you can kind of see, you know, sharp, slow grind, sharp sell-off, bounce into resistance, sell-off, some sideways, didn't quite retest support, held up, retested resistance, sold off into resistance, and now retesting support. If it follows the same fractal or trajectory as the Bitcoin chart in 2015, then this would be a reversal point. And then if it bounces off this area, then the next test of resistance would be a breakout, right? And then that will have confirmed this accumulation range, which you also see extending all the way back to early ETC days. So in my opinion, this isn't an accumulation range, historical accumulation range, showing similar fractal to Bitcoin. But again, there's never any guarantees, right? So support could always snap. However, if I wanted some ETC, then this would actually be a good point in the market where I personally would buy as a trader or an investor, because it's got, on this chart, you've got a throwback of resistance as support. And then on this chart, you have a retest of double bottom support and historical support that has been tested multiple times before. So just to kind of show you the BTC chart from 2015, I'm sure this is probably already burned into everyone's mind. But you can see that, you know, it had the sell-off, retested resistance. Actually, I guess it did it like a few times. But then like a retest of double bottom support. You can kind of see that retest a lot clearer on Bitfinex, because it actually retested the lows exactly. And so what I would look for in something like that is if you get a kind of like a nice bounce, and then if it curves up and then retests, then breaks out that accumulation range, so on and so forth. But I digress. So let me look at some other tickers. So that's two. So that's VET, CLO, WTC. So for me, CLO, for me personally, is not a buy. Doesn't mean it's not a good buy. Just looking at the chart, looks a little bit iffy to me. Let me just try to find this on. Okay, it looks like I already marked this up. Okay, so here's something interesting. So here's something I already had marked up that looked like it was at an accumulation range, right? It looked like it could have even started to form an Adam and Eve double bottom, was like a retest of support, but it broke down and it went lower on the BTC charts. So if you look at this support breaking on the BTC charts, it's actually a 33% drop. Now it's kind of like retesting this resistance zone and through here. So again, do or die moment. Had a throwback, the BTC chart, retested, resistance turns support, in through here. Almost, so right now, what I would look for something like this is, it's a possibility that this is consolidating and creating something like an ascending triangle. So if something like this, or any other chart for that matter, has consolidation here, any ascending triangles after a lower range breakout from accumulation, you know, that could be like a good breakout setup to consolidate in here. Looking at, let me just see if I can find something with a USD chart. USD chart. It's making higher lows. It's kind of like respecting market structure too. Kind of see it like retested this general zone where there's the meat of the action. So like even like Tezos, right? Like the price of Tezos right now on the USD chart, it retested a point of resistance and has like a very kind of clean market structure, and it's done this several times over, right? So see if that holds up. Someone's asking, do you primarily trade USD pairs or BTC pairs? Do you trade other altcoin pairs? What is your philosophy about that? Recently, I placed a trade using BTC pairs, but not sure all I should consider USD or BTC. Well, here's the thing. I used to only trade the BTC pairs. Most crypto traders used to only trade the BTC pairs. But there are certain disadvantages to that. One of the main disadvantages is taxes, right? Taxes. Every single time that you trade in and out, you know, you could be in an altcoin trade. So let's say you're in a XTZ BTC trade, right? And you know, let's say you buy over here and then you sell it for Bitcoin here, right? You made some nice profit. Wow, congratulations. You know, you made 157%. You've just increased your Bitcoin, 157% ROI, right? But now it's dropping. Let's say the price of Bitcoin drops. This is technically considered, you just longed Bitcoin, right? So the trade has not concluded itself. You just converted one trade into another trade. You went from a Tezos long into a Bitcoin long. On paper, on taxes, that's how it's treated, right? Now, in the States and other places, there's FIFO, first in, first out, meaning, you know, if you buy, you know, let's say you buy Bitcoin 5 times, your first Bitcoin purchase will be the first one out when you sell, right? But in Canada, it gets a little bit more confusing than that. It's called cost averaging. So basically, so here's where it gets really nuts as far as how this can affect taxes, right? And why I prefer to conclude my trades and or investments with fiat. Just, you know, it's less of an accounting nightmare. So like, let's say I buy Bitcoin. Here's an example. I'll use 3. Okay, so let's say I bought Bitcoin here, and let's say I sold it here, or I traded that Bitcoin for an altcoin for some tax harvesting, right? So we know that altcoins are turbocharged correlated. You know, on the books, that'd be like a 50% loss. So if I make any gains on my altcoins, that 50% loss will help offset those gains. And then, so let's say, so I sold here, let's say I buy here and sell here. So that would be a 50% loss on the books. But let's say, here's something nuts. So let's say Bitcoin were to dump down to, I don't know, let's say $1,000, hypothetically, right? Just for this example. Suddenly, what initially turned out to be a tax harvest is now no longer the case, because at the end of the year, what ends up happening is it looks at my average buys. So what it'll do is it'll take this $6,000 average and it'll add it to this $1,000 purchase average to give me an average price. And then so the sell rate here could actually not be tax harvesting at all. It could actually just be like a break even, right? Or if I ended up buying a ton more right here, then this could actually end up showing a profit instead of a loss, right? So it completely messes up the accounting. So I think that any serious trader, any serious crypto trader who ends up making a bunch of money and getting a big tax bill will take those things into consideration and probably really not want to be trading the BTC charts as much when you're creating all of these. It just turns into accounting nightmare. So it all depends. You really have to base that decision based on your own personal, your jurisdiction, right? The taxes and your goals, right? Long term, surely you end up paying the same amount, just at less convenient times. Well, that all depends, right? I mean, ultimately, at the end of each tax season, I want to pay the least amount as possible. Because let's say, okay, so here's an example. Let's say I don't touch it, so I buy down here. And then let's say in 2020, it goes up, super high or whatnot. If I have to end up paying tax on that, that's money. That's money I don't have. Like anytime you give up money, that's money that you can't trade with. That's money you can't invest with. That's money you can't have sitting in a high interest accounts or some high dividend paying investment or something that's going to be compounding your investments or whatever. That's just it's dead money that is gone, right? So if I could avoid that tax year to tax year, then I'll definitely avoid it. And in my opinion, people who are kind of hardcore about, oh, we only trade the Bitcoin price or whatever, either they're not paying taxes or reporting anything, or they're in a tax neutral jurisdiction, or they're not making any money. They're actually not even making profit. So it's not even something in their mind yet, but I guarantee once those people get massive tax bills, they're going to be very, very mindful of creating taxable events and how they treat their accounting. And in fact, one interesting thing that I was talking with Zach with Token Tax is that he said he'll make me a special account if I want to see the tax consequence of specific trades or whatever ahead of time. I can have a mock paper trading account with my averages and stuff, just to kind of see how that would play out. Anyways, I digress. So I'm more inclined to trade the fiat price. My life is just a lot simpler if I can buy with fiat and sell into fiat. It's less of my time, it's less money, it's less tax. It's a lot easier for me. So I've just shifted gears into that. And I started shifting gears into that when the price started to ramp up. I think once we start to hit the 5K plus zone, I was a lot more mindful of fiat, and everything under was all about accumulating more Bitcoin. So But then there's some altcoins that you can only trade. And then the other pairings, like trading against Ethereum and stuff, the only time I'll do that is if I'm not invested in it at all, and there's only, like, let's say there's some like random altcoin, and I can't buy it with fiat. I can only buy it with like Bitcoin or Ethereum. Then if I don't own any Ethereum as an investment, then I'll just buy some Ethereum with some fiat, and then I'll trade it for that Ethereum. That way, because if I were to buy Bitcoin and then trade for that Bitcoin, I've now disposed, as soon as I trade that Bitcoin for the altcoin, that's now considered a Bitcoin sell. That might actually trigger a tax event on something that, I'm just starting off on a position on something, and suddenly I'm having to pay tax on flipping that Bitcoin or selling that Bitcoin for that altcoin. Whereas, like, that's not a very good position. The only way that would benefit me is if I was down on my average Bitcoin price. If I was down on it, or any investment, if I was down on it, then that would be a tax harvest, so there would be a benefit to it. But if I'm actually up on Bitcoin, and I'm actually up in profit on Bitcoin, and I were to trade that for an altcoin, I'm now creating taxable events for nothing, and I'm creating debt for myself for nothing. So that's just kind of like all the things I've had to learn the hard way through experience. All right, so ADA, we'll look at ADA, Cardano. Very similar, throwback level, inverse head and shoulders on the BTC charts, breakout, throwback to retest. This is like one of those do or die moments. I personally believe that the probability is in favor of a bounce, but this is crypto, anything could happen. In my opinion, it wouldn't be a bad, this depth, and this is like a little bit of looks like a little bit of a bull flag or whatnot. In my opinion, this depth right here, you can kind of see it kind of dipped into prior supports here. It would be a good entry for anything. Like if there's any things that I wanted to buy, as long as it doesn't look like it's in a slow bleed or breaking support or whatever. But any charts that kind of look like this, I would definitely like take a stab at a dip. Actually, I wanted to follow up on Holochain. So I noticed that breakout zone or whatever didn't quite have any follow through, right? It kind of broke up. I'm in at 6 Satoshis. I shared this as a possible, someone didn't have any as a possible entry break of this, but it did a full retrace. In my opinion, if support on this were to break, that would invalidate that as a breakout, as an early breakout diagonal, and then it would probably like slowly grind a little bit lower. I'm in on this fairly low. I've been fairly patient, and again, I'm just holding it, getting for at least 60 Satoshis. That'll give me a solid 10x in Bitcoin price. Now, all that to say, even if I don't trade on the BTC pairings, it's still very, very good to look at the BTC charts because of opportunity cost, right? Basically, the markets are like this. The crypto markets are like this. Everything's correlated to Bitcoin. Bitcoin's either the dominant market, and it's going on a rally, and altcoins are bleeding out against Bitcoin, or it's alt season and altcoins are gaining over Bitcoin, or you're in a bear trend and everything's bleeding to hell, right? So you got to look at that just from an opportunity cost. For me, it doesn't. For my position trades / investments, it doesn't really make a huge difference because I'm weathering storms, right? I'm just weathering the storms. It's going to be a bumpy ride up. It could take a while. I have a ton of patience, so I'm fine with just waiting, being patient. And like, this is something that is very difficult to convey. Sometimes it can only be conveyed through experience. But anyone who's experienced the last bull season from accumulation to the highs will know that there was a lot of bumps and hiccups along the way, and black swans and all kinds of stuff. And overall, people who invested in from the lows, if they took profit, that's the key, to take profit. Milestones likely did very, very well for themselves. All right, and a ton of patience is required. Tomo, look at Tomo. Okay, so this looks like it's just on KuCoin. Kind of see it dropped, retested lower levels. Let me just 50% retracement. I would say that this line of support needs to hold up right here, right? If this breaks down, then you kind of get into like slow bleed again, or maybe even like a sharp sell-off. And if that were to happen, then it would probably have to retest the lower levels. Out of all of those coins that I looked at, as far as the charts are concerned, I probably wouldn't touch this one. I personally prefer something that looks like it's a little bit at the lower end of the spectrum, and then kind of retesting. This one seems like it had a decent run though compared to some other stuff. Dollar-wise, it probably went up nicely as well. So I'll look at one last one, TRX, and then we'll wrap it up. All right. So again, you can see something very similar here. Not all the charts look the same, but the ones that kind of look like this are interesting to me. So again, big sell-off. Oh no, altcoins are dead. It's over, right? Retest, resistance turns support. In my opinion, I think there's a higher probability of a bounce off of this line than a breakdown, right? So for anyone, if I was like trading, I would be knife catching these bounces. Or if I wanted to invest in something, that's what I would do. And then there's a clear line in the sand, right? If you knife catch the bounce and it rolls over and breaks down, then you can cut it, right? So let's say it broke this support. If I were to try to knife catch some of this, let's say I were to buy some right here, and if it were to break support, let's say I'd give it like 9% stop. If it were to have like a clear bounce, let's say it were to bounce to like the 61.8% zone, 50%, that would be like 4.4 to 1. And this would be like, close to 6 to 1 risk reward, right? That's, and I'd probably like just scale out at a little bit on each fib level, right? Just like each fib level would be a milestone for taking profit. If I was trading it as an investment, then obviously would hold it longer, right? So that's just my general overall thoughts. One last thing that I want to point out, that I want to just go back towards. For anyone who is with us in 2016, you'll likely remember how previous accumulations felt like, especially at the end of 2016, before the massive alt season in 2017. give you a couple of examples. There's two markets that we were really playing at the time. One was Factom and the other one was Ethereum Classic. So I'm going to look at Factom. ETC was a big one for us at the time. You can see like Factom was just really, it's like really choppy, right? Only had the BTC charts here, but we were trading it in through this zone right here, right? You could see like there's multiple shakeouts. I mean, just when you think, oh, things are going well, you know, let's just play with an example. Let's say you bought Factom here, and it goes up. You're like, sweet, I'm up 76%. And then it like drops and retests that lower level. Now it drops 50% before it ramps up and breaks out, right? There's like months of, yeah, CoinDiva has been with us through all that. You know, just months of crap, right? Just to kind of, and so what, like, so the translation of that is like what you'll see on, you know, crypto Twitter is like, you know, it'll be up here and everyone's going to be like, oh, Moon, my bags are going to be worth so much. I just put in the order for my Lambo. I think it's just going to, look, it's breaking out of resistance. You know, I think it's just going to plow right up to $1 billion. And then it dumps. And then it's like, oh, this coin's a piece of crap. You know, anyone who's holding this coin is a loser, blah, 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 whatever. And, you know, it's just like this big emotional roller coaster ride for all this noise. And so, like, I feel like when I look at people's posts on Twitter, I feel like that's what I'm seeing for Bitcoin and for like a lot of alts, just people getting super emotional and making these like wild-eyed bull and bear claims on a lot of this like choppy price movement. ETC. So like the market might want to punish you before it actually does a reversal, right? It might want to like test your resolve. So this is like just slow grind, bleeding. And finally you see some pay dirt, right? It's like, sweet, finally got a bounce, right? Just broke the immediate descending line, descending channel. You know, now it's a nice little bounce. Oh, what's that? Does a full retrace, retests. Okay, fine. You just retested. Oh, sweet, another bounce. Finally, we're breaking out. I think this thing just went a bit higher. Look, it just broke out to the moon, right? Right here, it just broke out. Sweet. You know, and then, no, it's going to come all the way back down and it's going to retest all the way back down. It's going to test your patience. Like, you sure you want this coin? You sure you don't want to get shaken out of your bags? You know, why don't you just rage dump this coin for us? Just quit, you know? And then the instant you do that, then it'll, you know, then it starts to ramp up. And then if you didn't, for those who don't get back into it, they basically get really salty because they sold at a loss, and then it ends up becoming a hugely profitable trader investment, and they spend the rest of their days, you know, on Twitter posting conspiracy theories on how, you know, Tether is pumping the price of Ethereum Classic or whatever, or, you know, just really salty and end up hating it for forever. You know, usually you can tell, like, the higher the salt levels are, it's usually because a person lost money or they never invested and they're jealous or whatnot. You see it a lot. So in my opinion, that's just a symptom of that. So is it easy? You know, if we are in accumulation and stuff, is it easy? Right? Will patience get tested? And then sometimes you get false signals and it just bleeds out lower, right? And there's no way to know. And I'll tell you, I made a crap ton of money on ETC. I made a lot of money in the initial knife catching down here. and then flipping it. This is very profitable. But then I was trying to knife catch it all the way down. So I was actually like averaging down various different areas and basically like buying my own blood, right? And, you know, and then just getting chopped around. You're like, man, this stupid coin. And then it turned into a huge amount of profit. And then I added to my position, accumulated positions on the breakouts, and just basically kind of traded the waves up. So it's not my first accumulation rodeo, and things can get really choppy and frustrating. But really, like, I just obviously got to manage risk. But I find that if I'm invested in something, if at the lower end of the spectrum, what appears to be accumulation, and I believe my investment thesis, and I think that the project's going to do well in the next cycle, then I usually just sprinkle in a mild dose of apathy as far as like, you know, as far as patience is concerned. Like, I won't stare at the chart every day, and, you know, I'm not going to will the charts to move with my telekinetic powers or anything like that, right? It's like watching paint dry. So you still be engaged, but I'm like mildly disconnected, you know, mildly disengaged, mildly apathetic, right? Like even Tezos right now, I'm up a nice chunk of profit right now. I'm up a pretty decent chunk of profit on a position where I was down a fairly decent chunk of being down, and I doubled down at the lows to get my cost average down, and now I'm up close to double. And but I'm not like, it's not hitting it hasn't hit my price targets yet. I'm not interested until it hits the higher levels. And if it does a retrace back down into the lower levels, then for me that's fine. I'm just going to be patient, mildly apathetic, and just let that go, you know, let it do its thing, let the markets take its course. And of course I could always be wrong. But for some people, you know, having a position size as big as I have in Tezos can cause some people a lot of, you know, anxiety, or, you know, maybe they lose sleep at night or whatnot. And for me, I look at the price now and I'm like, well, I'm in profit. That's a hell of a lot better than what I was doing like several months ago on that. So great. Right? Like, you know, I see resistance levels, and I know where people are probably going to end up taking some profit. And if I was trading it, you know, probably be playing the waves. But again, like I pointed out before, you can try to time the markets. And it's like, okay, I'll you know, sell here, try to buy back on the throwback. But let's say I have my orders here and it doesn't go there, and then it ramps up, and now it's like, oh crap. And then I have to end up buying it higher, and then, you know, what ends up happening? I just lost, like, even though this is profit, technically I just lost money. I didn't make as much money as I could have, right? So one might think that they're being more productive, trying to catch all these smaller waves. But guess what? The instant I took profit here, I now created a debt. I created a taxable event. And if I don't time this market perfectly, and then if I end up having to buy back higher, or, you know, let's say I just buy it right at the area where I sold, now I completely just created debt for myself for nothing, whereas I could have just held it and just retained the value, not try to get cute and time the markets and stuff, right? So in my opinion, I think I really do believe that position trading and investing cycle to cycle is a much better strategy. And then John saying, if it rolls over from there, you lose anyways. Yeah, so basically, yeah. And if it did roll over and it came all the way down, then yes, I would have lost out on all this profit potential. But looking from the forest, from the trees, like I'm okay with that risk. But once we do hit, the main difference between my approach and someone who's like just a diehard hodler is many people who subscribe to the HODL mentality literally don't take profit, right? They literally don't take profit. Like there's some people that rode Bitcoin from like 2 digits all the way up to 20,000 and never even bloody sold and took profit, right? So I'm not in that camp. Believe me, if I see parabolic markets or like life-changing amounts of money or prices that are too good to be true, I will definitely be taking profit. And I will not, there's one thing that I'm not shy about is selling my bags to take profit and actually selling into cold hard cash into the bank, period. I'm not shy about that. When I see markets that are like extremely parabolic, the markets like scream at me, that I have to hedge, I have to sell, this won't last, so on and so forth. Right? But at this lower end of the spectrum, are the markets screaming at me right now? Right? Is it like, oh, if you don't sell now, this is it. This is over for Tezos. You're never going to see these kind of gains again. This is completely overpriced. This market is crowded. It's saturated. Oh, this looks parabolic. None of that. None of that. To me, this is like, I look at this as like, this is a market that's just getting started. It could drop lower. It could chop around. Who knows? Maybe it breaks new lows. Who knows? Right? I don't have a crystal ball. But I do know that based on looking at the charts and other charts and markets that I've traded and so on and so forth, I do know that this market does not look like something that is at the later end of a market cycle. In fact, none of the markets look like they're at a later end of the market cycle. You might not be able to nail the exact top and bottoms. You might not be able to know where the exact top of the parabola is going to be or where the exact bottom is going to be on accumulation or how long accumulation is going to take or if there's going to be some final shakeouts before the bull season. But as long as you get the general concept, as long as you get the meat of the trades, of the moves, and can just recognize when a market is closer to accumulation versus closer to the parabolic blow off top, as long as you can get that general range, even if it's a sloppy kind of shotgun approach in the general zones, you're going to be doing all right. So that's really the main difference, right? The main difference between someone who's been at this game for a little bit longer than someone who just joined yesterday is that, someone who's been at the game for a bit will look at a market like this and be like, okay, this is ridiculous, and literally not want to buy anything either because of the price being so ridiculous. And then they'll look at a price that's low like this, and like, did I know where the exact bottom was going to be? No. Did I think it could go lower? Yeah, it's always a possibility. But did I have the right idea and averaging down and going in heavy? And basically, like, I'm all in, like, as far as like, I'm all in. My crypto portfolio is now 100% in crypto. Obviously, that's not including other investments and fiat and stuff out of it, but I don't have anything sitting on any exchanges except a little bit on BitMEX, and that's it, right? So it's the general zones, right? Was this perfect? No, it wasn't perfect, but it's the general concept and the idea. We'll see how it plays out in hindsight, right? It's a lot. Hindsight's easy. Hindsight's always 20/20. When you're on the bleeding edge, you just got to go for, you got to go for general price zones without trying to get too obsessed with trying to nail exact bottoms and tops, right? So, my opinion, I think this is a much better time to invest than at anything on this ramp up here, right? And this does kind of look like, in my opinion, this does look like the early signs of a reversal, but this is some major resistance we got to break through, right? This is some major resistance we got to break through. And we're probably not going to break through it on the first shot, right? Like I would not be surprised at all if we had like a big deep pullback or whatnot. It wouldn't surprise me. And if we did break out of it, that would actually be a very good, solid bullish sign. And if we did break out of that, then I bet you we'll hit some strong resistance in here, and then probably have to have a throwback. But you know, the instant it does that, we could safely say, in my opinion, that we could safely say it on a technical level, that would be a confirmed bull trend. And obviously that would last. That would be a lot quicker than what we've seen in 2015, because 2015 it took a lot longer for the accumulation cycle. So I would be sped up. But if we were to follow a similar 2015 trajectory, we would probably drop back down into the lower levels and chop around a little bit, do a little bit more sideways. So we'll see how this all plays out. But buy low, sell high. If there's any one thing that I live by in crypto, crypto especially, is I just try to buy as low as I can and sell as high as I can, and it's not a one-shot deal. Usually I have to scale in multiple orders, scale out multiple milestones, so on and so forth. So we'll end it there. We're going close to 2 hours, so I'm going to stop the recording there. So hope everyone has a great weekend. And we'll see you all next week. Let's see if we get that bounce off of prior resistance turn support on those alt BTC charts. So we're kind of at that do or die moment. If we get a good strong bounce, then we know that there's there's something to the bullishness. There's a little bit confirmation. If there's not, and we do a full retrace or break down further, then obviously we're back to the drawing board. All right, folks. Take care. Cheers.